This video is going to be taking a look at the 2022 club account, and so it was for Abbey Hockey Club. So it says, included in the assets and liabilities of Abbey Hockey Club on the 1st of 1st, 2021 were the following. Clubhouse and AstroTurf at cost €950,000. Bar stock €1,820. Equipment at cost €42,000. Bar debtors €560. Life membership €48,000. Bar creditors €700. Wages due €440. Levy reserve fund €50,000. Subscriptions received in advance €1,000. Investment interest receivable due €420. All fixed assets already have 3 years depreciation accumulated on the 1st of 1st, 2021. The club treasurer has supplied the following account of the club's activities during the year ended 31st of the 12th, 2021. So here we have the receipts and payments account for the year ended 31st of the 12th, 2021. So you've got the receipts there on the left hand side, so that's all the money coming in, and then on the right hand side you've got the payments, all of the monies going out. So you're given the following additional information and instructions. Number 1, bar stock including catering stock 11,460 on the 31st of the 12th 2021 was €21,700. Number 2, bar debtors and bar creditors on the 31st of the 12th 2021 were €780 and €1,100 respectively. Number 3, provide for depreciation on equipment at 12.5% of cost. A full year's depreciation is charged in the year of acquisition and none in the year of disposal. Number 4, Clubhouse and AstroTurf are to be depreciated by 2% of cost. Number 5, the club has decided that life membership is to be credited to income over a 10-year period which commenced in 2019. Number 6, the grant from the National Lottery was received on a once-off basis. It is to be treated as a capital item. The grant from Hockey Ireland is received on an annual basis to support the day-to-day activities of the club. It is to be treated as a revenue item. Number 7, the wages due on the 1st of 1st, 2021 were owed to the club coach for 2 weeks. Provide for 3 weeks wages due on the 31st of the 12th, 2021 and include a bonus of €30 for each of the 3 weeks. Number 8, subscriptions include number 1, subscriptions for 2022 amounting to 3,160. Number 2, levy for 2021 of €100 each on all 650 members. Number 3, levy for 2020 of €100 each due from 30 members. Okay, what's required? So required, part A, show the club's accumulated fund capital on the 1st of 1st, 2021 for 30 marks. B, show the income and expenditure account for the year ending 31st of the 12th, 2021 for 35 marks. Then C, show the club's balance sheet at 31st of the 12th, 2021 for 25 marks. And then for the last 10 marks there, part D, part 1, explain with the use of an example what is meant by a special purpose profit and loss account. And number 2, there is a proposal to reduce annual subscriptions by 10% for the next 3 years. As treasurer of Abbey Hockey Club, what points would you make in favour of this proposal? And that's for 10 marks. Okay, so let's get started. Part A here. Show the club's accumulated fund or the capital on the 1st of 1st, 2021. So all this is a list of all of the assets and we minus all of the liabilities, and we have to just be very careful of the date. It is on the 1st of the 1st, 2021, so the start of that year. So at the top of the question, you will have noted that they said included in the assets and liabilities of Abbey Hockey Club are. So you can see there, Clubhouse and AstroTurf, that's an asset. Okay, bar stock, that's an asset. Equipment at cost, that's an asset. Bar debtors is an asset. Life membership is a liability because the club owes those members that membership for the rest of their lives. Okay, so that is why that is a liability. Bar creditor, liability. Wages due, liability. Levy reserve fund, liability. So a levy reserve fund is a fund that is collected from all club members for a particular purpose. Okay, so say for example, there's a hockey club, they were maybe extending their changing rooms or something like that, okay, or making a function room. Well, they collect the levy from each member, and then, you know, it's a liability back to the members until they actually use it. Subscriptions received in advance, so people have paid up front in advance then for next year, so we owe them that membership, so that's a liability. And then investment interest receivable due, so investment income due, that at the start of the year, that's an asset. Now, it's very important to note here that all fixed assets already have 3 years depreciation accumulated at the 1st of the 1st, 2021. So if we look down in the notes, we've already read through this, but we will remember in note 3 and note 5, it gives us the information about depreciation of fixed assets. So number 3 says, provide for depreciation on equipment at 12.5% of cost. A full year's depreciation is charged in the year of acquisition and none in the year of disposal. And then note 4, clubhouse and AstroTurf pitch are to be depreciated by 2% of cost. Okay, so if we're looking at the clubhouse and AstroTurf, first of all, we have €950 clubhouse and AstroTurf, multiply that by 3 years and then multiply it by 2% of the cost, and that is 57,000 that it has been depreciated by over the 3 years. Then the next fixed asset is the equipment. So the equipment costs €42,000. Multiply that by 12.5% then, and then multiply it by 3 years, and that is €15,750. So we can get started doing our accumulated fund then. So we're just literally listing out all of the assets and then taking away all of the liabilities from that. Okay, now, so you can see here that we have taken the accumulated depreciation, 3 years accumulated depreciation away from the cost to give you the net book value of the clubhouse and the net book value of the equipment. And it's the net book value figure that we put into your column there. Okay, so what we have to do now is we look for any other assets or liabilities from the start of the year that are hiding in the receipts and payments and in the additional information. Okay, so we're going to look at the receipts and payments first of all, and we're going to be searching for assets and liabilities here. So if you can notice in the receipt side up the very first item, it says balance 0101 2021 9,800. So that's the start of the year. That means they had an asset of bank 9,800 at the start of the year, which we will put into the assets. Back to the receipts and payments now. You can see here that we obviously have investments, right? We know that because there was investment income due at the start of the year, but here they're telling us more information about the investments, okay? So it says 10 months interest on 5% investments up to the 30th of the 6th, 2021. That's €1,050. So if we have, right, €1,050, which is 10 months interest, all right, what we are going to want to do, all right, is find out how much 12 months interest is. So 1050 divided by the 10 multiplied by 12 is 1260 investment income for a year. When we have that, we can work out what our investments are because we have been told that our investment income is 5%. So 1260 divided by 5 multiplied by 100 gives us €25,200. And that is our investments. So €25,200, 5% investments. Okay, then back to the payments here. So it says bank loan and 9 months interest at 8% per annum on the 30th of the 6th, 2021. Okay, so bank loan and 9 months interest at 8% per annum on the 30th of the 6th, 2021. That means, okay, if it was paid on the 30th of the 6th, but it was for 9 months interest, that means that they must have had a loan at the start of that year. Okay, so they must have had a loan at the start of that year. All right, so we need to work out how much is the loan and how much is the loan interest that they had owed by the 1st of the 1st, 2021. So here's how we work this out. All right, so if it says the loan plus 9 months interest at 8% per annum is the 273,480, right? You want to know how much loan interest they'd have to pay in those 9 months. So if you only had the loan for 9 months, so 8% per annum multiplied by 9 over 12 gives you 6% interest that they had to pay over the term of that loan. So therefore, the 273,480 here is 106%. Okay? We divide that by 106, multiply by it by 100, and we get our answer there to be €258,000. It's €258,000. Now, 6% interest then on that, we just multiply that by 6%, that gives us 15,480. And so the loan interest due then by the 1st is 3 months. So if it's 15,480 multiplied by 3 over 9, that gives us 5,160. Okay, so 5,160 is the loan interest that was due at the very start of that year. Okay, so we can put that down into the liabilities. The loan, €258, and the loan interest due on the 1st of the 1st, €5,160. Now we're going to check the rest of the additional information and see if there's any assets or liabilities hiding out here from the start of the year, from the 1st of the 1st as well. So if you can spot, all right, down in the subscriptions include, you can see that they have a levy for 2020, okay, so that's from last year, of €100 each, due from 30 members. So they had a levy due on 30 members, okay, at the end of last year. So people owed them. People owed the club. Members owed the club that levy, okay? So when a levy is due to the club, when people owe the club the levy, that is an asset. So you're going to have levy due, €100 multiplied by 30 members, and that is €3,000 there. So that is all the assets and liabilities that you had from the start of the year. What you have to do now, you just have to tot them all up, okay? So all the assets tot up to €960,050. All of the liabilities tot up to €363,300. That gives us a reserves figure of €596,750 at the end of that year. So that is part A completed, okay? Okay, so part B then says show the income and expenditure account for the year ending 31st of the 12th, 2021, and this is for 35 marks. So what we're looking at here is we're just going to be recording all of the income and all of the expenditure, okay, for the current year. So we're talking about 2021, all right? When it doesn't relate to 2021, we get it out of there, okay? So all we care about is 2021 here, okay? So what we're going to do, we're going to start off in the receipts and payments account. We're going to start the receipts side, so on the left-hand side, and we're going to just record all of the incomes and look at all the expenditures. We have to be very careful not to put in any balance sheet items, okay? So let's take a look. So the balance at the start there, that was for the accumulated fund, right? So that won't be going in anywhere. Subscriptions, that is the subscriptions is the amounts that we receive from members, so 425,500. What we're going to do is we're going to look at the top of the question and see, is there anything relating to subscriptions up there? You will see there that we have subscriptions received in advance, €1,000. So that does relate to the current year, so therefore we will be adding that 1,000. Then down the bottom you see subscriptions include subscriptions for 2022 amounting to 3,160. Number 2, levy for 2021 of €100 each on all 650 members, and then 3, levy for 2020 of €100 each due from 30 members. So what you need to realise here is this is either that they are not subscriptions or that they are not subscriptions for the current year. Okay, so subscriptions for 2022, yes, they are subscriptions, but they're not subscriptions for the current year. And then the last two are levies, which are not the same thing as subscriptions. So subscriptions is the members' fees, but a levy is like a donation to the club for big capital expenditure. Okay, so say if they were doing up their changing rooms, or they were getting a new bar or something like that, we'd collect fees, those from members, and then we owe it back to them unless the club spends it. Okay, so that there, number one in the subscriptions is 3,160, and then for the second one, levy of 2021, €100 each on all 650 members, so that'll be 65,000. And then you'll have the levy for 2020 of €100 each due to 30 members, so that will be your €3,000 there. So you have here your subs 425,500. You're going to add the 1,000 subs for the year. You're going to minus the 3,160. You're going to minus the 65,000. And then you're also going to minus the 3,000, which is the levy for last year. So that's the subs done. Next, we're going to look at the investment interest. Now, we had investments of 25,200 that we worked out in part A, okay, and we know that they are 5% investments, so we should receive 1,260 for the current year. Okay, so that's what we should receive. We will work out in the balance sheet whether we have received it all or not. Okay, but that is what we have received for the current year. Next, we have competition fees, so 22,400. Now you can see in the payment side there, they bought competition prizes, 18,900. So 22,400 minus 18,900 gives us €3,500. Next then, we have catering, okay? So the catering, all right, we have 122,500, okay? And we have to say, right, okay, what else have we got to do with catering? So you've got the catering 122,500, you've got catering purchases up in the top of payments, and then you've got catering stock down here, 11,460. So you did buy all these 93,100, but you didn't use 11,460 of them. So your cost of the catering then is 93,100 minus 11,460. So your catering profit then is €40,860. Next then, we had a sale of equipment. It cost 30,000 and we received 7,000 for it. Now, as you know, every time we sell a fixed asset, we have to work out, did we make a profit or did we make a loss? Okay, so did we make a profit? Did we make a loss? You'll note here the cost was 30,000 and we received 7,000 for it. Now it said here in note 3, provide for depreciation on equipment at 12.5% of cost. A full year's depreciation is charged in the year of acquisition and none in the year of disposal. So full year's depreciation, charged in the year of acquisition, none in the year of disposal. So that means we're not going to depreciate that equipment this year. And we have to remember what it said up at the top of the question, that all fixed assets have 3 years depreciation already charging them. So we're going to work out profit or loss and sale of assets. So the formula, cost minus accumulated depreciation is equal to the net book value. Compare that to the allowance then, and that will tell us if we have a profit or a loss. So the cost is 30,000. Then the accumulated depreciation is 30,000 multiplied by 3 multiplied by 12.5%. That is €11,250. That gives me a net book value of €18,750. We compare that to the allowance of 7,000 and that is a loss of €11,750. So next we have a national lottery grant there, 120,000. If we see in the notes though, it says the grant from the national lottery was received on a once-off basis. It is to be treated as a capital item. So that means that's going to go into the balance sheet, okay? So that is going to go into the balance sheet. So that's not going to be going into our profit and loss account. All right. So the grant from Hockey Ireland is received on an annual basis to support the day-to-day activities of the club. It is to be treated as a revenue item. Okay, so the grant from Hockey Ireland though, the 13,500, that is to be treated as a revenue item. They've told us to do that, to put it into income, so that is fine. Okay, next we have bar receipts. Okay, so we've got a few things going on here with the bar. We've got bar stock, we've got bar creditors, we've got bar debtors. We have got the bar receipts here. We have got bar purchases here. We have got bar stock, including catering stock of 21,700. So we'll have to figure out how much of that is for the bar only. And then we've got bar debtors and bar creditors at the end of the year were 780 and 1100 respectively. Okay, so bar trading account. We've got sales. Okay, so bar receipts. Okay, 73,600. Then we have to think about, we had bar debtors at the start of the year. Okay, so we had bar debtors at the start of the year, 560. All right, so those people bought the goods, bought the drinks, bought the food last year. So therefore, I'm going to minus that out of this year's accounts. Then we have bar debtors at the end of the year. So €780 is the bar debtors at the end of the year. So we're going to plus that 780. Next then we have less cost of sales. We've got our opening stock of the bar, 1820. Then we've got our purchases. So we've got our 43,800 purchases there. And we have bar creditors at the start of the year. So bar creditors at the start of the year, we purchased from them last year. So therefore we're going to minus that 700. Okay. But we do have bar creditors at the end of the year, 1100. So we're going to add that there. So that is €44,200 then in total. Then we have closing stock. So we said that bar stock, including catering stock, 11,460 on the 31st of the 12th was 21,700. So for us to find out what the bar stock is, we just take the catering stock out of that, and that gives us €10,240. Now, so the cost of sales altogether, €35,780, leaving us with a bar profit of €38,040. Okay, so I've just noticed that this profit and loss account here, that should say income and expenditure account for the year ended 31st the 12th, 2021, because it is a club account. If it was a service firm, profit and loss account would be correct. Okay, so that's the bar profit done. So that's the left hand side done, the receipt side done. Next, we're going to move up and we're going to take a look. So we have 6 months loan interest. Okay, so 6 months loan interest for the loan would be due there. Okay, so we had worked out that the interest was €15,480. Okay, 9 months was 9 months interest. So if we divide that by 9 months and multiply it by 6 months, because 6 months of that relates to 2021, so that would be €10,320 loan interest there. Next, we have sundry expenses, €64,360. So sundry expenses are just like miscellaneous expenses. If there was anything else lying around that didn't have a home to go to here, we would be putting it in here. Okay, there's nothing random lying around, so the 64,360 can go straight in there. Next, we've got purchase of equipment, but that is a balance sheet item, so we won't be putting that in. But then after that, we have coaching expenses and wages. So we have wages due up the top, €440. Okay, and then we have in note 7, the wages due on the 1st of the 1st, 2021 were owed to the club coach for 2 weeks. Provide for 3 weeks wages due on the 31st of the 12th, 2021 and include a bonus of €30 for each of the 3 weeks. Okay, so you've got the coaching expenses, the 15,540. The wages due up the top were for last year, so we're going to minus that. And then wages due on the 1st of the 1st, okay, were owed to the club coach for 2 weeks. So that means that it is 220 per week, okay? And then it says provide for 3 weeks wages due. So 220 multiplied by 3 weeks, 660. And include a bonus of 30 for each of the 3 weeks, so then 90 as well. So here you'll have the 15,540. You'll minus the wages due on the start of the year. And then you'll add the 3 weeks wages at the end of the year. And then you'll add the 90 bonus at the end of the year. So that's everything from the receipts and payments account. Okay, we have to look at the rest of the notes then and see, are there any other incomes or expenditures hiding out here? So remember this here, I should have called that the income and expenditure account. Okay, so note 3, provide for depreciation on equipment at 12.5% of cost. A full year's depreciation is charged in the year of acquisition and none in the year of disposal. Okay, so you can see here we have 42,000 equipment at the start of the year. Okay, so start of the year you had 42,000 equipment. Then you sold equipment that had cost 30, and then you bought equipment that had cost 47. So you don't depreciate the one in the year of disposal, but you do depreciate the equipment that was bought this year. So we will have 42 minus 30 plus 47, and then multiply that by 12.5%, and that would be €7,375. Then you've got the last thing, we've got the clubhouse and AstroTurf pitch. So they're to be depreciated by 2% of cost. So there was no additions to the clubhouse and AstroTurf. It was just 950,000 that we have from the start of the question. Okay, and we're just going to multiply that by 2%, and then that is €19,000. Okay, so we add that all up then, 128,655, and that will give us an excess of income over expenditure. So that's brilliant. Okay, so they had way more income than they had expenditure of €329,945. So that is the income and expenditure account. Okay. So let's get started with the balance sheet. So 25 marks for the balance sheet. So I would just lay out your balance sheet first. So you get the template of the balance sheet down on the page, and then you can just search for everything, assets and liabilities, on the 31st of the 12th. Okay, so be careful here not to put in any assets or liabilities from the start of the year. Okay, very, very important. Do not put down any assets or liabilities from the start of the year. Okay, so first things first, we have clubhouse and AstroTurf, and we need to remind ourselves that there was 3 years accumulated depreciation on it, and then we depreciated it for this year as well. So we're going to have a cost of 950,000, and then we're going to have 57,000, which is our 3 years depreciation, and then we're going to add the 19,000, which we did in the income and expenditure account a few minutes ago. 19,000 is the depreciation charge for this year. Then the bar stock, we need to remember that was from the 1st of the 1st, so we do not use that. Equipment is next. And so there's a few things going on here for equipment. We had equipment 42,000 at the start of the year. We sold equipment worth 30, and we bought equipment worth 47. And then this note down here is saying provide for depreciation on equipment at 12.5% of cost. A full year's depreciation is charged in the year of acquisition and none in the year of disposal. Okay, so quite a lot of things going on here. So the first things first with the cost. The 42,000 is what we had at the on the 1st of the 1st. We sold the €30,000 worth, and then we bought the €47,000. Okay. Then from part A, the accumulated fund, we had €15,750, and then we minus the accumulated depreciation from the sold, and then we add the accumulated depreciation for the year. So 59,000 is the cost, 11,875 is the depreciation, and then the net book value is 47,125. When we add all that up, there the cost, we have 1,009,000. Then in the depreciation, we have €87,875. And then we have the net book value, €921,125. So that is all of the fixed assets there. The bar debtors is the next thing. That was debtors from the start of the year, so we do not have that. Life membership, that is a liability because we owe people the life membership until the end of their lives, okay? We owe them the membership. Note 5 then said the club has decided that life membership is to be credited to income over a 10-year period which commenced in 2019. So we have already written that off, okay, in 2019, okay, 2020, and we haven't done it for 2021 yet, okay? So we've done it for 2 years, so there's 8 years left. Now, we took away 6,000 of the life membership already, okay? And we have then 42,000 is what is left at the end of the year. So 48,000 up here is what was left after 2 years had already been taken off, right? So that's 8 years. So that's where we got the 6,000 from. So the life membership would have been 60,000 at the very start, and then we took away the 12,000 for the 2 years already, and then we have 6,000 for this year. So 3 years have been written off, so it's now down to €42,000. Okay, bar creditors, we do not use that because that is bar creditors from the start of the year. Wages due, that was wages due from the start of the year. Levy reserve fund. So levy reserve fund, that is the fund that each member has to give to the club. Okay, so each member has to give it to the club, and the club just has to spend it, or they have to give it back to the members, but it's for a particular purpose, capital expenditure, okay? Now, there's also a levy down here, levy for 2021 of €100 each on all 600 members. So that levy reserve fund, we have 50,000, and then we add the 65,000 that is from this current year, 2021 as well. So the total levy there is 115,000. Subscriptions received in advance, that was at the start of the year. That was a liability at the start of the year. It's not now. Now, investment interest receivable due, that was an asset at the start of the year, but we will have to say to ourselves, is there any investment income actually due at the end of the year? We have our 25,200 investments, okay? And so we know that the investment income for the year is 1,260, and we worked that out in the income and expenditure in the last section, right? But what we have is we received 1,020 during the year, okay? But 420 of that was from what was due at the start of the year. So we have to make sure that we take that 420 into account. And so we're actually owed €630 then at the end of this year. So whoever we have invested with, they owe us €630 at the end of this year. Okay, so next then, all right, we have balance at the end of the year. Okay, so balance at the end of the year, 239,170. That is the bank balance. There was no notes on bank balance at the end of the year. Note 1, bar stock, including catering stock. So all the stock altogether there, 21,700. So we can fire that in. Then we have bar debtors, 780. We have bar creditors, 1,100. Then note 6 is the grant from the National Lottery was received on the once-off basis to be treated as a capital item. So we're going to put that down into capital and reserves. So €120,000 is going to go in there. Then we have in note 7, provide for 3 weeks wages due on the 31st of the 12th and include a bonus of €30 for each of the 3 weeks. So that is the coaching wages due, the €660, and then the bonus 30 for 3 years, so that's €750 there. Then we have the subscriptions for next year, so that is subscriptions prepaid, okay, so that is a liability, 3,160. We tot up all our liabilities there, 5010. We take that away from the sum of the assets, which is the current assets, which is 262,280. That gives us a total net assets of 257,270, and that gives us total net assets then a working capital of 257,270, apologies, and then total net assets of 1,203,575. So the only thing we have to do in the finance by then is actually add in the accumulated fund from part A and the surplus of income over expenditure from part B. They all add up to 1,161,595, and then that is the capital employed then of 1,203,595. So that is the balance sheet there of Abbey Hockey Club for the end of the year, 31st of the 12th, 2021. You just make sure as you're scanning, you're constantly scanning through this question, constantly scanning. You're doing nothing but scanning in this question. Maybe you might like to do the layout of the balance sheet at the start so that you can fire things in as you think of them as you're going along, okay? Or maybe you'll just wait to do it all at once and then scan carefully and make sure that you're putting absolutely everything in. Either way, that is the balance sheet for Abbey Hockey Club on the 31st of the 12th, 2021. Okay, part D now. So on to a bit of theory. So part 1, explain with the use of an example what is meant by a special purpose profit and loss account. Okay, so many not-for-profit organisations run activities to raise funds for the organisation, so such as Abbey Hockey Club. Okay, so you saw there that they ran a bar. So these activities are intended to generate profits. So Abbey Hockey Club was getting profits from the bar that they can invest into the organisation. The expenses and revenues relating to that particular activity are entered in a special profit and loss account, and the profit is then transferred to the income and expenditure account. Examples: running a bar, a restaurant, a lotto, or a dance. Part 2 of this then, okay, is saying there is a proposal to reduce annual subscriptions by 10% for the next 3 years. As treasurer of Abbey Hockey Club, what points would you make in favour of this proposal? So the treasurer of the club is the person that minds all of the finance. So you're the person working with the books constantly. You know all about the finances of the club inside out. So you have all the knowledge. What points would you make in favour of this proposal? So you're saying, you know, it's a yes straight away, okay? So what would you have to say to support this going ahead, okay? So you could say, we could see from the question, right, that the club is in a strong financial position and could afford reducing its subscriptions by 10%. How do we know that? Well, they have a bank balance of 239,170, which is considerably higher than the 9,800 bank balance that they started with at the beginning of the year. The healthy bank balance is probably mostly due to this big €120,000 national lottery grant that came in, which might not be of recurring nature though. They have the investments of 25,200, so that's really good, and they've spent 40,000. So they got 7,000 from the sale of equipment, and they bought 47,000 worth of equipment during the year, which might be of non-recurring nature. So that's really good too. That's really healthy as well. Now, looking at the profit and loss account here, the income and expenditure, I should have called it, okay? Looking at the profit and loss account, we can see that the subs were generating 355,340, okay? And if we were to reduce the subscriptions by 10%, that would reduce the income by €35,534 based on the subscriptions for this year. And the club is well able to financially sustain the 10% reduction in the subscription fee for 10%. So you're the treasurer, you're the person dealing with the money. You're not even looking for advice. What points could you make in favour? So you're just saying that this club is in a healthy financial position, but you are backing that up with lots of figures, okay? So that is the 2022 Abbey Hockey Club question complete.